Hello traders. All right, so this is a trade that was taken about 2 days ago, and we caught about 700, almost 800 pips. So in this video, I'm going to walk you through the exact approach I use and the same blueprint my students are using to triple their accounts within days of joining my community. Okay, so even at the end of this, if you just stick to the end, I want to show you certain figures of how my students triple their accounts. Okay, so if you just stick all the way to the end, you'll see how easy it is for you to triple your account just within a few days. All right, so let's get it. First things first, you only need 4 rules. Okay, it's not anything complicated. You just need 4 rules. 1, you need daily bias for the bigger picture. 2, you need a clear liquidity sweep at the point of interest. Okay, this one is very, very important. 3, you need displacement plus entry confirmation. 4, you need a proper risk management for you to manage these whole trades. Okay, so let's start with the daily bias.
Want to pass your prop firm challenge fast? Get my full ICT SMC course built to get you funded in 3 weeks. And if you want live trades and daily setups, join my private Telegram group. Links are in the description. Let's get you funded.
All right, so we are on our daily chart. If you haven't watched my video on daily bias, I'll just put the link. It's going to be easier for you to understand this. But even if you haven't, just a recap. With daily bias, the overall move we are looking at internal range and external range. Internal range, I'm just talking about fair value gaps. Okay, these gaps right here. This is how price moves. All right, so price is going to move from that internal range liquidity, that's IRL, to external range liquidity. External range, these are just swing highs and swing lows. So here, since we are going to the downside, this was our swing low right here. So this is our external range liquidity. Okay, so price moving from internal range to external range liquidity. Now, of course, you don't need to catch the whole move like that. You can even just catch the next 24-hour price movement. That's fine. You can still make, you can catch even 50 pips. That's just fine. Okay, so price started from internal range and was going to external range liquidity. So the way bias works, guys, it's giving you an overview of what is supposed to happen. It's not supposed to happen immediately you see it like that, but that's why we go down to the lower time frame to the points of interest. Otherwise, on the higher time frame, that is where the whole price movement started from. It started into internal range liquidity all the way to external range liquidity. There were some trades that were caught here, but the trade was not held all the way to external range liquidity because after price bounced off from that internal range liquidity, the next day gave us a bullish bias. Okay, so when you have two things contradicting, you have price coming from internal range liquidity. This is a bearish bias, and then all of a sudden you have a bullish, but you just need to wait. Just be disciplined. Okay, sometimes it's not every day that we just trade. Okay, you just need to be disciplined. Let the market give you a proper bearish bias. So you can see this other candle now closed below the previous candle's low. So we had a bearish bias now. Okay, so when 25th came now, 25th, which is the trade that we caught 700, almost 800 pips. When price opened right here, Okay, so 24th closed here, and then 25th opened right here. Let me use a bigger, okay, right here. Okay, so we have a bias. This candle is giving us a bearish daily bias. So the bias is already confirmed. You can tick. If you have somewhere to tick, you can just tick. So price opened on the 25th here, so we can just go down. So I'll start with a 1 hour chart. Okay. On the 1 hour chart, when we go to the opening on the 25th right here, okay, they open. That was the day open. All right, so the only thing that you need is for price to trade above the day open. Okay, you need price when you are looking for that point of interest. A point of interest, for some of you don't know a point of interest, this is an area where you need to look for a potential trading entry. Okay, so you need price to trade above. Since you are selling, you need price to trade above the day open, and then you can look for that potential, for that point of interest, and then go even lower to look for that sniper entry. All right, so on the 1 hour chart, you can see price going all the way up. So if you are marking your your break of structure, your change of character, you can say price broke structure here to the downside, okay, because it took out inducement there, broke to the downside, and then here it was just trying to go up, and then it already took out inducement there. Okay, now even if you don't know how to draw market structure mapping, the only thing that you need to know about points of interest above the day's open when you are selling is if you have a fair value gap or a single candle order block. Here we had both. All right, so first of all, we have this single candle order block right here. Okay, and then down there you have a fair value gap. So don't just go straight away into and just start entering your trades right here just because, okay, you've already marked, okay, the daily bias is already confirmed, it's bearish. A point of interest, I already have a single candle order block. Let me mark this as 1 hour single candle order block. Okay, you still need to go all the way to the lower time frames. Okay, so from here you can even go to the 15-minute chart. Okay, if you want those sniper entries, guys, this is very important. You just need extra confirmations. Okay, so now price is already in that 1 hour single candle order block, which is good for you. Now on the 15-minute chart, remember we were also talking about price sweeping liquidity around the point of interest. So when you see price, it's already in that 1 hour chart, and you can see it swept. There's a turtle soup. Okay, okay, so price swept that high and then dropped, leaving a single candle order block on the 15-minute time frame. This candle right here. This is very, very, very important. This candle right here. Okay. If you don't know what a single candle order block is, there's I think I've made some a few more videos about a single candle order block, so you can just check it out if you want. It's very important. All right, so even here you are not just entering based on a single candle order block. Okay, it doesn't work like that. So the entry here was based on the 2-minute chart. Okay, so right here in the single candle order block, you go down to the 2-minute chart now. Okay, you need the multiple time frame analysis for you to gain a lot more confidence. Okay, a lot more confidence when it comes to these entries. So just here, okay, let's do this. So before you even look at where to enter down there, I want to show you this. These are great indicators of where price is about to go. Okay, when price starts making these equal lows when you are selling. Okay, this is jackpot right here. Price is making equal lows. Okay. All right. So price dropped to the downside and then it had to go back. This is a 15-minute. This is a 15-minute single candle order block. So you have two POIs here on the higher time frame. You have that 1 hour single candle order block and the 15-minute single candle order block. And then on the 2-minute chart, you have price making a market structure shift right here. Okay. That's our market structure shift. This is what you need for entry. You really need it. After this, you also need a displacement. A displacement is this fair value gap right here. Okay, this right here. Okay, let me just draw it all the way out. Displacement. Okay. All right. Now, when price dropped to the downside here and then start going up there, the only thing that you are looking for, guys, the only thing that you are trying to do here is for price to go back to that displacement. Another thing, if you don't know what a breaker is, I think I've already made a video on that. Price was respecting this candle right here. Okay, there was a lot of confirmation here, a lot of confirmation. There was a displacement here. If you wanted to enter in a displacement, you can do that, but just make sure it's within that breaker. This is a breaker block, the displacement, sorry about that. That's a breaker block right there. Okay, so there was a lot of stuff that is saying you have to enter this trade here. Okay, now the entries that were made, of course, were made just in the displacement here. Okay, right here in the displacement. Now the reason most of the trades were made in a displacement is because, first of all, this displacement was just in the same area as the breaker block right there. Okay, and the reason the stop loss was not put just above displacement is because you have a single candle order block there. Price can easily go into that single candle order block and then just take you out, and price just leaves you hanging. So it's very important that you just be aware of your surroundings. Yeah, just to be safe, you can put your stop loss above that swing high, just like that. Okay, and then start. So when price wants to go somewhere, this is what happens. Okay, I always tell my students that even if you didn't end at a certain point, sometimes price is way too intentional. It's going to give you a second chance of entry. Okay, there's a really good reason I didn't enter here. Of course, it looks really good. Like you can see, there's a market structure shift, and then price went back into displacement. But I don't know. I didn't have enough evidence that price is going to drop to the downside here until these equal lows were made. So here it was easier to enter because there's something I'm looking forward to price dropping down to. Okay, I hope that makes sense. So now after that happens, now the only thing that is remaining is for you to do your risk management now. Okay, your risk management, very important. So if you have 2 trades, or maybe you just have 3 trades, if price drops all the way to the downside like this, especially these equal lows, when these equal lows are taken out, if you want, you can even break even. Okay, if you want, you can even break even just here. This is not you saying you are scared or anything. You are just trying to protect your investment. It has nothing to do with you being scared or anything like that. Okay. So also down here there were these equal lows. Okay. This was another target. These things right here. Okay. Yeah. So if you're a scalper like me, okay, it's just that these days I've been really trying to hold trades just because of yeah, my students. Otherwise, right here, this is a 1 2 3. Okay, you are going to get at least 117 pips, which is not bad at all. Okay, it's not bad at all. Now the ultimate price, this is where risk management comes in now. Okay, you are not, if you are trying to hold a trade, you are not going to stick to the 2 minutes chart, 1 minute chart, or 5 minute chart. Okay, at least go to the 15-minute chart. Okay, yeah. So this is our external range liquidity on the daily chart. This was the daily, and this was supposed to be the ultimate what? Right there. This was supposed to be our ultimate what? Target. Okay, right there. Now, for you to hold a trade, it means you've already taken out certain profits for you to go all the way down there. This is supposed to be your bonus. This is supposed to be your bonus. Now, what I'm trying to show you now is how, let's say, maybe you started with, yeah, there was about 800 and something. Now, since I'm trying to show you how you can start with the smaller amounts, let's say $100 here. Okay, $100. At least it was going to, if you are risking at least 3%, 3% of $100, that's just $3. If you are risking $3 here, you are going to get $84. Okay, that's just on one trade. Let me go to these calculations and show you how you can easily now flip that account bit by bit, but very, very effective. Okay, let's go here. Okay, so let's say we are still using the same example. Okay, okay, let's just say you have, okay, we are not starting with 8. Let's say you only have like $100. Okay, maybe you just started with $100 and you're risking 3% with the same trade that was taken. Okay, so if you calculate this, if you won that trade and maybe you only had one entry and then you just held it, like that. From $100 you are going to risk $3 and you are going to get $87. But let's just say maybe things were not that perfect. Maybe you even lost like 3 trades in a row. Okay, you lost 3 trades in a row, so meaning you only have like $91. Okay, so that $91 was still going to get you 79.58. So let's just do this. Okay, so 79.58 plus that $91. That's 170. Let's just say 170. Okay. So remember, you already lost 3 trades, and then suddenly you have this big trade. Okay, you get your 170. So 170, if you actually won on the next trade again. Now I want to be assuming that you are losing trades as you go along the way. Okay, so let's say again you lost 3 trades in a row, and you were the risk was from that was the risk was, so as your account is growing, even your risk is growing, even your potential profit is growing. Everything is supposed to grow. Okay, so let's say again you lost like 3 times in a row, which let's just say 15. Okay, you lost $15. Okay, I'm not really good at math, so let's say you lost $15. So you are remaining with 155. Okay, 155. So if you won on your 4th trade, that 155 was going to get you 135. Okay, so your account grows to 290. Okay, so that 290 now, guys, so as long as you are keeping the same risk, even when your account is growing, if you are just keeping the same risk, this is going to be very easy for you. Okay, it's going to be you can see as your account is growing, even your lot size there is growing, even your potential profit is growing, your potential loss is growing. Okay, the only thing that is constant here is the risk to reward ratio. So if you actually won, okay, from that 290, because sometimes you can have like 5 trades in a row, you are just go some you forget that there's even losing. The whole week you're just winning. Okay, so from that 290, you just add 253, which is going to be, okay, so that's going to be 543. So now the reason I like this number right here, this is where you need, I call this a sustainable level. Okay, that was what, 540 something. So the reason I like your account to be at least 500 is because the amount that you'll be withdrawing after this at least is going to make sense. If you only have like 100, 200, please try to use that to grow your account, not for withdrawals. Okay, I know it's very tempting. Most of my students, when they just start making maybe $80 or something, they already want to withdraw. It's very tempting, especially when you've already gone through a lot of shit. Okay, but I'm telling you, once you reach at least, this is a very small account. Okay, even $1,000 is a small account, but it starts making sense at least, because when you win something from there, you start getting something at least, like, especially if you are taking trades with me and we are holding together. When you start getting, now, even when you get something like a 474, it doesn't mean, because when you add this to that, it's almost $1,000. It doesn't mean you have to get half of that now for you to withdraw. No, what you start doing now, from now on, if you want to enjoy, you can start getting even less than half from this. Okay, because now this is where you start eating. The thing is, let's say you are getting half from that. Half of 474, yeah, it's just a 474, is 237. Okay, so this 237, you add this to 543, that is going to be 780. So the whole point of this is for you to be growing, not just withdrawing. Okay, so once you start hitting higher numbers, these numbers start growing really, really quick. It doesn't matter how many times you are losing your trades in a row. I'm telling you, once you just hit that one trade, it's really going to blow your mind. You wonder why you haven't been doing this for a long time. So your goal should be, at least when you get to 1,000, at least when you, a lot of people are not that patient, but yeah, at least when you get to 1,000 and then you start hitting this 1 to 29 risk to reward, and this is just one trade. I'm just talking about one trade. Okay, there I've seen a risk taker. Some people risk at least 7% or even 10%, which is just fine for me. Okay, if you are risking like $30 and getting 800 something, then you are happening. Okay, it doesn't matter if somebody else, if you look at somebody else's trade, they are making at least $15,000 just on one trade. It doesn't matter for you. This is where you are right now. Okay, so this is for small accounts. This is for small accounts. Okay, this is how you try to keep your cool and grow your account, guys. It's not anything too complicated. You just need to, face your fears, stay disciplined, and just be patient. This is so easy, I'm telling you guys. Okay, So if you are still interested in mentorship or signals, we are still running and we are very much back. Somebody tried to hack uh, my YouTube channel, even my email, but yeah, everything has been sorted out. We are not going anywhere. Yeah, so if you are trying to join, the link is in the description or in the comment section. Otherwise, until next time, happy trading.